The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Wednesday morning. We got about 30 minutes to go until the opening bell, and we got markets across the board in positive territory. The S&P's right now up by about 12 points, trading at 39.11. Quite the sell-off we had yesterday. I'm just going to zoom in on the action yesterday. Selling really began at about 1 o'clock Eastern Time. We were trading up there at a high of 39.37. You trade down 47 points to a low last night of 38.90. From there, we're up a bit. You can see we consolidate throughout the evening. Europe opens at about 4 a.m. Eastern Time. We trade to positive territory. You got the S&Ps right now trading at 39.10. Tech stocks higher as well, 13,069 in the NASDAQ 100. We got the Dow up about 100 points right now, 32,404, and the Russell up almost 1% at 2,200 on the dot. As I mentioned in the 9 o'clock update, Bitcoin trading higher, up by almost $2,000 at 57,000 even. Mr. Elon Musk last night tweeting out that Tesla, they're going to begin accepting payment in Bitcoin. Looks to happen towards the second half of this year, but again, putting some demand under Bitcoin. You take a look at the daily on Bitcoin. All things considered, we're just chopping around between about 55,000 and 60,000. Call it maybe a consolidation, but we're pushing about 2 weeks now that we've been bouncing around in between these two numbers. Strong numbers for Bitcoin up there above 55,000 and hanging tough. Crude oil up $1.80 right now. That's 3% positive at 59.50. We got a ship stuck in the Suez Canal. That could be putting a little bit of a bid under the price of oil this morning, as it looks to stop some of the trade going on over there. We got gold up $7 at 17.32 this morning, and notes and bonds right now, call it flat, but we had a rise to higher prices. We'll zoom it in yesterday. We end the trading day yesterday at about a price point of 132. You trade to 132.08 overnight, and we're back right to about 132 right now in that 10-year. We'll jump over to the Volatility Index, the VIX, currently trading 2032. We saw a little bit of a spike yesterday, but as I mentioned, these spikes, nothing compared to the spikes we've gotten recently, right? You put this thing on a daily, all things considered, just hovering right in around 20. We haven't seen a spike near 30 anytime soon. When you go back, folks, there was a time towards the end of February where you would hit 30. I believe it was 4 out of 7 days. Yeah, 1, 2, 3, 4 out of 7 days, going from the late February to early March. We were sitting at 30. It's only March 24th, folks. Things seem fantastic. The vaccine is rolling out. The economy is marching on. But be prepared for some volatility as time persists. We get core capital goods orders today, a miss, and in a decent miss at that. I just talked about in the update, but important information when you look for the growth of the future. So U.S.-made capital goods, fell in February. This suggests some cooling in business spending on equipment. Business spending on equipment, folks, is falling at a time when we're going to be opening back up. The market was looking for that number to rise. Overall durable good orders fell by 1.1%. The market was looking for a rise of 0.8%. January had a rise of 3.4%. Not what you'd like to see, but doesn't mean the end of the world, doesn't mean that we have to be spending money on capital goods. Really what we need to be doing is just opening back up the number of businesses that have been shut down. The service industry hit the hardest. We'll see how that plays out. I talked about Tesla. So there it is. Elon Musk says people can now buy a Tesla with Bitcoin. We'll pull down to the tweet to see it in action. You can now buy a Tesla with Bitcoin. He says it as clear as can be. I think that's Eastern time. I'm not sure. Let's see if we jump over and we get a print in terms of when they're talking about. You can now buy a Tesla with Bitcoin. Yes, it would be 6 hours ago. So the print on that, 3:02 a.m. And you can see, folks, when we zoom in the chart on Bitcoin, talk about a correlation. He can really drive these markets. We'll pull up Bitcoin. We'll put it on a 15-minute. We'll drive to the action. And there is, so 2:30 it begins. Did somebody know that that tweet was about to come, folks? 2:30 was the first pop. There's the second pop at 3 in the morning, and the run goes from there up to about 57,000 in Bitcoin. Crude, as I mentioned, up about $1.73 to $59.49. This story, interesting to say the least. So there's a blockage to ease by tomorrow is how they put it. Let me see if I can find... Just looking for, there we go. There's the picture. So they got a shipping container that's basically blocking the entire Suez Canal. About 12% of global trade and 8% of liquefied natural gas pass through the canal, as do around 1 million barrels of oil every single day. It looks like the ship, they said they had winds of about 30 miles an hour or 40 knots. It shifts a little bit right. That thing just gets stuck basically left and right. They anticipate getting it out by tomorrow. Don't want to be the captain of that ship. That's a tough one in a big way. There was some more ship. Yeah, I mean, there you got the ship there as well. That's a big one, folks. When you got 12% of trade going through one waterway and it is blocked stone cold by a shipping container this morning. See how that plays into things across the board. Let's see what else we got going on. Speaking of travel, there's a couple articles out here I've been talking about, whether it's JetBlue, right? You see all these airlines back to basically prices that they were at prior to COVID in terms of the domestic airlines, JetBlue, Southwest in particular. Vail, so 2021 Epic Pass goes on sale at 20% cheaper, making people feel like they're getting an incredible deal. Is the top priority going into next winter. You're going to see a lot of these, but you're going to see them come and go quickly, folks, as demand ramps up. Actually surprised to see this is going on, but it's 2021. So what happens? The 2021 ski season isn't over. Parts of Colorado currently sitting under a foot of fresh snow. Unprecedented deals on 2021, 2022. So the new passes go on sale yesterday. Limitless skiing from $583. That's a 20% markdown from the past 5 years when the numbers were in the mid 700s. 2020 prices topped out at $729. There's a lot of deals out there, folks. I would encourage you, if you're thinking about it all, you're thinking about taking a trip to Vail, you're thinking about taking a trip wherever you are, start looking right now because things are going to ramp up over the next 2 or 3 months. And I'm excited about the anticipation of demand. I mean, you talk about a roaring 20s, folks. We might have our own roaring 20s going on in a big way, the 2020s. I was fortunate to get my vaccine, the first vaccine shot yesterday in Florida. They opened it up to 50 plus everywhere on Monday. They opened it up to 40 plus in Orange County, not far from me in Orlando. I was fortunate to be able to go online, grab an appointment for a vaccine. I encourage you to do the same, folks. It's safe. It's effective. I got the shot in the arm. I was fortunate to get the Pfizer shot. I got my second appointment lined up for about 2 weeks into April. That's how we're going to get over this thing, folks. But back to this, you're going to see it. You're going to see it ramping up in a big way. JetBlue has availability. You can book through April 1st. I keep saying, JetBlue, send me that free promotional dollars for all the free press I'm giving you. But it's a service to people out there, folks. JetBlue has great flights from two of the biggest cities we have viewers in, because that's where we were based originally, Boston and Tampa, Florida. And you can book a fare right now for no cancellation fees, no change fees. That is like something that airlines might never offer again, hopefully in our lifetime. You can do that, though, through April 1st. So check it out. Book a fare if you're thinking about traveling. Worst case scenario, you cancel it, pay nothing. Those deals are going away soon. I'm surprised to see Vail's doing it out here. Brian Air Chief, talk about airlines. Robust summer for travel despite setback. Continue that conversation a little bit. We'll take a look at some of those airline stocks as well when we get back. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got markets in positive territory. We got the S&Ps up about 12 points right now at 39.12. NASDAQ, tech stocks positive as well by about 70 points. Dow positive by 100, and the Russell positive by about 22 points. Getting back into notes and bonds, a little bit of a reprieve from what we had seen overnight as we're seeing some lower prices and inching back to higher yield. You were as high in that 10-year as about 132.09 at an overnight high print. Now you see the drop as we're continuing. 131.27, negative by about 2 points, 2 ticks in that 10-year. Let's go over to our man Kevin Hinks. Folks, 11 a.m. Eastern time, live on Tiger TV every trading day, fast market. Kevin Hinks, Alex Coffey, the team at the TD Ameritrade Network, breaking down the markets, going through the hypothetical trades that they set up every day over there, whether it's the options market using earnings, whether it's just the general market overall. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. A nice little bounce back here, and another data point, Tommy, where this may be weather related in terms of durable goods and the numbers that came out. I was just on with Oliver Rennick, and in terms of the Midwest, a big miss in the durable goods was transportation, and where if you connect the dots to autos and if you connect the dots to bad weather throughout the Midwest, it's very possible that you're not shopping for a car when all the cars are covered with snow.
Sure.
So the softness that we saw in retail sales looks like it's also, following over into durable goods. So once again, this makes next month's data even more important as the markets, at least so far today, seem to have shrugged off this durable goods number.
I'm glad you talked about next month, Kevin, because I was going to say, right, so we've gotten a lot of data that's been explained away, probably rightfully so, but we're going to find out, right, in the next couple months, as saying some of this data from February. I mean, Texas, of course, the hardest hit almost out there. We're just shutting down the entire state, people without heat for days, and then exploding pipes in the aftermath. But we've had numerous data points where I'm almost losing track of them in my mind right now, Kevin, in terms of whether it was anything we're talking about from February. There was a lot of anomalies for weather, but boy, there's going to be some exciting times just as market participants, man, when we come into the next couple months, I say, and this is my own personal bias here that I'm bringing into things, but when you start talking about what happens next month, we'll just talk about the durable goods orders, right? In terms of that, we had an expectation for a rise this month for February. We see a decrease. And then you start talking about the non-farm payroll numbers, Kevin, as we get over this COVID pandemic, we bring in, the vaccines, we get over that hump, and then we're supposed to have the service sector. Is there anything on your mind when you look at the next 2 or 3 months, and this is a time like none other, man, in terms of some of those events? We're always looking at earnings, but do you ever look at some of those events, particularly right now? Because in my mind, man, I think there are going to be some highly volatile events when we're waiting for some jobs numbers, maybe over the next 2 or 3 months, where there's really the expectation to kind of get back to, and I don't want to call it normal, right? Because we have some ways to go, but to really see an improvement in that market. How are you thinking about that at all? What's going on in your head when you look at some of what we're going to be dealing with as we come into the summer? But it's going to be a summer almost like none other, man.
Yeah, Tommy, I'm kind of a data geek, and I like to justify things by looking at the data. And think about this. A few weeks ago, we had a horrible retail sales number, right? But if you look at the weekly numbers that come out in terms of Redbook, which is department stores, chain stores, and discounters, right? The last 2 weeks, the numbers from Redbook have been 8.4% higher and 9.4% higher in the last 2 weeks. Those numbers are gargantuan in terms of same-store sales in those numbers. So that has to show up in the retail sales data coming up next month. So the fact that transportation was such a big part of durable goods leads me to think that a lot of things are coming. Remember, we're 3 weeks away from earnings in banks. What happened during the last quarter in terms of, the 10-year yield and the net interest margin that these banks may have gotten over the last quarter? Well, it looks, rates have basically gone from, 0.5, in at the beginning of the year, let's say the rates were just below 1%, right, about 0.9, and now they're 1.7 during the quarter. That is a big windfall for banks. So they're going to start us off in terms of earnings coming up in a couple of weeks. So I think this quarter is going to show massive reopening of the U.S. economy, Tommy.
I agree, man. I was saying, Kevin, I'm not sure you heard me. I was fortunate. I got my first vaccine shot yesterday here, and the pent-up demand from everybody I talked to, it's just amazing. There's nothing like it in our lives because we've never seen anything like this in our lives. I've been talking to people, whether it's book and travel, JetBlue. I think it's only the next week that you can book a fare and you get no cancellation. It's like, go book one, folks, because I'm telling you, it's going to be a packed house in like a month or two. And again, my own personal bias, but the pent-up demand levels are just insane. And this is my own, take of just like, we've never lived through a whole year like this, and hopefully we'll never have to do anything that even resembles it. And my goodness, can't wait to sit at a restaurant, Kevin, get on a flight somewhere, right? Go see my family in Boston, the whole kit and caboodle, in a big way, man. But those events, like you talked about, retail sales, man, whether it's durable goods, whether it's non-farm payrolls, we got a lot coming up. But banks, man, yeah, they're going to have some expectations in a big way when they come with their numbers, as they should, with where yields are. So with everything going on, Kevin, what are you guys going to be talking about on Fast Market coming up at 11?
We're going to be looking at 3 names with all similar, but not exactly the same business models. RH, Restoration Hardware, has earnings after the bell today. We're also going to look at Home Depot, a very similar stock in terms of home improvement. And then our first block will cover Target, the big box retailer. So like I said, we're pivoting off of RH and doing a theme today of retailers.
It is interesting. Home Depot, man, strong stock, but remarkable that we're back right where we were in August pricing for that equity. Now, you just ran up from March 5th to like 250 to 290, but some of these stocks, the acceleration early on in COVID, dramatic, and then we've seen some basing as the market's kind of caught up. Restoration Hardware, not quite the story, man, as in quite an uptrend from $84 I got on my chart going back of the year to sitting at 508 right now. Folks, you heard it. That Redbook data, Kevin, that's a great point, man. That's why I love listening to your program, Fast Market, every day, to get that kind of insight, man. We appreciate the education, and, of course, we look forward to the program today.
Thanks for having me on, Tommy.
Thanks, Kevin. Stay tuned, folks. We're going to finish up what we got going on. Listen, if you haven't checked out the program, folks, I don't know why you haven't yet, but check it out. 11 o'clock every day on the Tiger TV network. You can tune in. Kevin Hinks, Alex Coffey, the team, they break it down. And there's nothing like being a data geek, folks. That's the way to be. Data's running everything, and those expectations when we come in, but they've been harsh numbers for February. Kevin made a great point talking about retail sales. We've now seen durable goods. The explanation has been it was weather related. Seems to be a fair assessment of things with regard to the weather we had in February, but that's only going to add, folks, to the expectations of March numbers when they start coming out in early April. And guess what, folks? It's March 24th. We're going to start getting those numbers before we know it. Time is amazing. It is just flying, and we're going to get those numbers, and the market's going to be looking for a normalcy to return in terms of what Kevin's talking about. I mean, 8% red book, right? But boy, folks, there's pent-up demand like we've never seen, at least in my lifetime, for that economy. And we're going to see if it comes to reality after all that rhetoric. Stay tuned, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps up by 15, a little bit of a lift on the opening bell. NASDAQ tech stocks up by about 53, Dow up 120, and the Russell up by 27. I got a chart here up of Intel. Quite the acceleration last night on Intel, up to 68.42. This morning, we're up 5.8% right now at 67.18, continuing the run to positive prices. Intel out there, the story they're talking about, Intel said it would spend $20 billion to build two new plants at existing facilities in Arizona in an effort to grab more market share and fill gaps created by a worldwide chip shortage. Intel aims to start production at the new plants by 2024. Talk about a lag time. Start production of the chips by 2024, folks. That means they got almost 3 years until they start producing anything from that plant. Intel shares higher on that news, though, while shares of Taiwan Semiconductor trading lower. Anytime you're going to get some competition, you got Intel, they're going to be pushing out chips. We need the chips now. Are we going to need them by the beginning of 2024? Hopefully there's a catch-up and they make some progress in terms of that shortage prior to then. But nonetheless, Intel, they're going to be pushing out chips into the tune of $20 billion to build 2 new plants. Quite a number. So GameStop, out with their numbers last night. We'll pull up GameStop, the fan favorite over at the Reddit boards, the Wall Street Bets boards, down 13%, 158.53. You drop out of bed pretty quickly. Last night after their numbers, they reported earnings of $1.34 a share. They missed forecast by a penny. Revenue also came in below consensus. The retailer did not address the Reddit-fueled trading frenzy in its stock during its earnings conference call. How do you not address that, folks? Okay, I know it's not really pertinent to their day-to-day operations, but it is pertinent in the idea that it dramatically shifts the company, because in a Security and Exchange Commission filing said it was considering the idea of raising money by selling shares to fund its ongoing transformation. Folks, the leaders of this company are doing a disservice to their shareholders if they are not selling as many shares as they can into the public when it gets to these levels. GameStop right now, pulling up the Analyze tab, sliding it down. We're talking about a $12 billion, $11.2 billion company to be exact. Do they have a future? Potentially. Do they have a current existence that equates to an $11 billion market cap? Probably not. We know that supply equals demand, and that's where the price is going to fall, folks. But this company's got a lot of revamping to do. Even if they change things to become the online retailer that they hope to be under new leadership, you're still talking about billions of dollars that they would be able to potentially raise for capital to get over that hump. You better believe that they could be considering it. And the fact they don't even talk about it during their earnings call, I don't think is fair in terms of everything going on in that stock. Viacom. So let's talk about this one. I got a call on Viacom a couple weeks ago from a caller. He had a great trade going on. Forget where this thing was. It was probably around $90, $70, somewhere in this run. I said, you maybe take a couple shares off, right? Maybe close out half your position or something. We just traded from 34 up to 100. I think it was Viacom. Nonetheless, now Viacom, CBS, they're going to be a player in a big way in the streaming deal as well. I think Viacom, they might be doing Paramount Plus. They got one of them, I believe. Now, you put this thing on the 15-minute. Viacom shares, I believe they came out with an offering yesterday. It's continuing the run. You're down 8% today. You just lost 17% from the close of action on Monday, and a stock that's accelerated higher dramatically. Viacom, yeah, another 7%. And yes, so they had a $3 billion stock offering. And again, folks, you know, you got to be aware when you get these types of runs and you're a management in a company like this and you see, like, for instance, Viacom is now valued at $52.1 billion. And that's at $84. Okay. You back things up. So you're at $52 billion at 84. Well, we were just trading at 42 January 20th. So that means the market cap was about $26 billion. On January 20th, you fast forward 2 months later, and you got a company worth $52 billion, and you have a competing landscape in streaming where you need to compete for content. Not surprising, they might push out some shares, folks. Anytime you see this run in this type of a market, especially with a company that's going to be competing in a growing landscape that where they may need money, be aware that you're going to see these drop-offs, folks. You get these runs. We're all human. They have humans that are in charge of running this company. The humans in charge of running this company said, geez, we just went from $30 in November to $100 in March 15th, let alone we just doubled the price from February 1st to March 15th. You're talking about 45 days, folks. You doubled the price. Not surprising they take some money off the table. We'll see where Viacom can go. But on a Fibonacci level, folks, it's been a one-way rocket ship basically since the run began in December. And if you do back off 38%, look how quickly we do it. You're talking about $75. We almost got there in 2 trading days, folks. For a pullback, we're about $8 away, but we're down $7 today. It doesn't mean it can't happen in no time. All right, what else we got? General Mills, they're out with their numbers. General Mills, let's see, they fell 2 cents a share shy of the forecast. Quarterly earnings of 82 cents a share, revenue exceeding estimates. They said expect demand for food at home to remain elevated relative to pre-pandemic levels. I mean, you're seeing it there, folks. There's been a shift change of our behavior, and it's not going away. And I would agree with that. It's not that I'm playing both sides of it. We're going to see a Roaring '20s style demand in terms of getting out, being social, traveling. But we've also gotten very used to the comforts of our home, folks. You can have both. They're going to ebb and flow, and there's going to be a drawback of people staying at home for a period of time. But overall, we've seen a shift in everything. General Mills, you're down about 4% today. Remarkable when you consider. Now, we got to start backing things up more than a year. Because now, wow, look at General Mills. They were down at $36 towards the end of 2018. There's your COVID volatility down to a low of about 46 or 47. We're trading at about 58 right now for General Mills and their products. That's off a high of 66 in the middle of 2020. Adobe was out with their numbers as well. They beat estimates by 35 cents a share. They made a $3.14 a share. Revenue above estimates as well. Strong current quarter and full year earnings guidance on the strength of its flagship Creative Cloud Suite and other cloud-based offerings. Adobe, they've been a rocket ship lately. ADBE, you were about 250 in the pre-COVID lows to 536. We've just been chopping around, consolidating. Adobe basically flat after quite a volatile session last night. You spiked to almost 440 to 470. You're sitting within $1 of where we were yesterday at 460 for Adobe shares right now. Adobe, strong guidance. You're seeing it in these stocks, folks. I mean, look at those numbers, right? You beat by 35 cents. Revenue above estimates as well. Strong quarter, full year earnings guidance on strength in its flagship. I mean, they beat on everything. They guided above on everything, and the stock can barely trade higher, folks. You're seeing this across the board. A lot of this is already built into many of these equities, folks. Okay, now pulling up Adobe on a yearly, 289 to 536. The market realized pretty quickly at the COVID lows. We figured things out by maybe July or August, and from there we've consolidated in some of these biggest tech stocks out there. I mean, take a look like, for instance, Amazon. Amazon shares, we're going to talk about for them. They got a little bit of more information in terms of who will be taking over AWS as well. Amazon, we've been chopping around since about July 6th. Remarkable. It's March 24th. We're about to be in April of 2021, and we've been in a consolidation in Amazon since July 2020. Stay tuned, folks. We'll be coming back. We'll go over Amazon shares. We'll go over a couple other things. Give us a call, 877-927-6648. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the S&P is positive by about 17 points right now. Markets in positive territory. We got some action in commodities, as we do every Wednesday at 40 past the hour. Let's go over to our man, Teddy Kegstad. Folks, you can check Teddy out every trading day at forex-trading-unlock.com. We talk to Teddy every week. We always got some exciting stuff. We got some stuff going on in Crew this week in a big way. Teddy Kegstad, good morning.
How you doing? It's good to see you guys again.
Good to see you too, man. Thanks for coming on. So, always an exciting time in the market, man. We got action right now. Where do you want to kick off in terms of what's on your radar about what you're looking at this week, whether it's Forex or how they're playing into things?
I think we'll start off with the Australian dollar today. So we've been talking about the oil gold trade and interest rate trade, which are definitely on the table. We have a stability in gold right now, a little consolidation. Oil, the nice little sell-off. Now, remember, we've been guiding certain currencies with oil being one of the influencers, Australian dollar being one of the key ones. So when we left off last week, we had come off a major high, newer move high, and we were starting to consolidate, and I mentioned that it looked like a head and shoulders formation was potentially forming. Well, we got the trigger yesterday. The Australian dollar sold off nicely. It took out the neckline as well as made a newer move low, which confirms a head and shoulder no matter what. So I got that as a downside target now of about 0.7520 around that area. Nothing major and extreme, because if we get a rally in oil, this is going to put the brakes on this break in the Australian dollar, U.S. dollar. But right now we are starting to see that little rotation. I mean, we have had a nice sell-off in oil over the past couple days. The interest rate equation is not off the table yet. Now, I'm not trying to call a bottom in the bond market. I mean, we were talking about this a month ago. I thought that, we would be like 5 handles higher than where we are right now. I didn't think we would sell off as much as it has. So as far as that variable in currency pricing, that's still very edgy. And remember, we talked about unemployment, how that's going to become a big number to watch with the bonds over the next few months, which is also going to affect the currencies as well. So I think that we definitely need to key off of those. But because of the oil trade, and this is where I'm looking at the currencies right now, we have the head and shoulders in Australian dollar, U.S. dollar, so short-term bear. U.S. dollar yen is consolidating. Okay, so you would remember how oil and gold have been kind of driving the yen trade. Right now, because gold is fairly stabilizing, I think that's why you're seeing it just buffer on its highs. And remember, we have flight to quality currencies. I just want to remind your viewers, you have the U.S. dollar, you have the Swiss, and you have the yen. Right now, the dollar is flight to quality. Bonds are falling, Swiss franc is falling, the yen is falling, okay? So we have to stay focused on those trends in those currencies. So I think that the yen, you may see a little bit more of testing of support down to 108, 107.5. Maybe if you get let's say a rally in gold to kind of buffer up. You remember I had an upside target around 1770, maybe 1800 tops in gold. If we can see a spike up there, you might see that little dip, again in the yen. But I don't think that's going to happen. I think that's kind of consolidating right now, and it's heavily watching oil right now, especially for the yen. Then we go to U.S. dollar Canada. After we talked last week, remember I was saying, do not try and catch a falling rock. The trend has been so bearish with the U.S. dollar Canada, especially because of oil. Because of the sell-off in oil since last Thursday, we've had a nice corrective bounce in the U.S. dollar Canada. So for any of your viewers out there that are trading that, they got to be focused on the fact that the U.S. dollar Canada has been a long-term bear against the dollar over the past year, okay? So it's oil related right now as far as this bounce, okay? It's already hit the corrective points as far as going back up through resistance. I don't think you're going to see very much more of a rally in that currency right now. So now for the U.S. dollar Swiss, I do have an upside target now of 94.5. They are buffering under the highs. And like I said, the flight to quality currencies on markets right now, they're all tanking except for the dollar. That's where flight to quality is right now, especially with gold stabilizing and not swinging around. There is nowhere else to go because the bond market's tanking. You know what I'm saying?
Sure.
So, and then pound U.S. dollar, obviously testing support right now. We've been following that with the oil trade as well. I think you can see a correction down to about $1.36 even in the pound, but that's about it. We would need to have a big corrective slide in oil, I think, to really get anything below that. And you got to remember, we're post-Brexit. Even though there's lockdown measures going on in the UK and the EU, post-Brexit means that the EU is on their own now. So the UK is taking care of themselves, and I think they're going to still get strength because remember when the Swiss decoupled the euro about a year and a half ago when they stopped supporting the euro? Well, the Swiss is doing that right now. That's one of the reasons why the Swiss franc is weaker because they're buying euros trying to prop up their market, Okay. So. And we also know that as far as central bank actions, remember I've been saying how, I'm always adamant about, there's the commodity-driven parts that can happen with currencies sometimes, like right now it's being influential, but interest rates are definitely a function of currency pricing. We haven't had any central bank real action that's unexpected over the past couple months. We know that they're going to try and keep rates low, but your yield curve, even in the 10-year now, is starting to push through support as well. Initially it was just the 30-year with the short-term staying locked on their highs, like the euro dollar and stuff like that, and the 1-year and 2-year notes, they're barely coming off their highs. This 10-year inflection now is kind of a big deal. I think that especially as we watch the unemployment numbers, and I know you had a thing about durable goods and stuff like that a little earlier about some of the production numbers.
Sure.
These numbers are going to be big. They're not just for the stock market. Remember, these are all bond numbers. There's about 8-9 numbers a month that come out for the bond and the interest rate markets. No one's talked about them for years because it didn't matter. You got to remember, a year and a half ago, we're at record low unemployment. Unemployment wasn't even a factor. And even a rise in unemployment by a couple percent would not have really done anything to the bond market. We're in a different scenario right now, So, and I think that we're going to start to see this, the dollar strength, there's a lot of dollar bears out there. And I think it's going to be very hard pressed to be very bearish to dollar in the short run right now. Not unless we have a huge sell-off in oil. We'd have to have a big rally in the interest rates. And especially what scares me the most is the U.S. dollar Swiss. The fact that that's buffering its highs, it's ready to break out to the upside again. There's no geopolitical or banking action to justify the Swiss being so battered by the dollar right now. So that means that long term, by your different trade zones, the lockdowns in Europe and the ramifications of what's going on with the slowdown in their economy, people are really pessimistic now on the EU, So, and I think that
it's
you're going to see that.
quite a problem they got going on over there right now compared to us, especially right now. Yeah.
Right, and that's going to be where, we've been talking about this now, where the dollar index is going to be a hard gauge, even though right now it just is busting out, trying to make new highs. But remember, the euro and the pound are the two biggest components. So they're free flowing from each other right now. They're no longer a bull or a bear together versus the dollar. The pound's very oil related, but the EU, it's not the oil so much as it is the interest rates and the economy, and I think that's going to continue, that we have to really watch out for. And definitely there's the bull as far as a market.
It is amazing. You have the Brexit go on, right? We talk about Brexit and then the divergence we've seen with the UK and Europe. Teddy, man, I wish we had more time. Thanks so much for the update. We'll talk to you next week, man.
Sounds good, brother. Take care.
Thanks, man. You too. We'll be right back, folks. Stay tuned.
Is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 9:55 a.m. this morning. We're about 25 minutes into the trading day, and so far kind of hanging right where we were most of the pre-market session. Right now, you get the S&Ps up 13 points at 39.13. Bitcoin holding well, up about $1,700 at 57,000. Crude up $1.88 right now, inching towards $60. We got the gold contract right now up $7 at 17.28, and notes and bonds a little bit of lower price and higher yield. You're talking about a yield right now of 1.644% on that 10-year. What else we got going on in terms of in the market? Jumping around to some of the headlines I had. Interesting one out here on Bloomberg. An article out, this morning, talking about something to try and wrap your head around, folks, because the normal data measurements are not quite congruent to everything we have going on. Inflation is harder to measure after a year of pandemic spending, right? It should make sense, folks. When you look about where we're spending money, more booze, less clothes is how they put it. COVID expenditures upend old ways people allocated spending. Yeah, no such thing as entertainment and recreation in the last year, folks, as we're locked down. Transportation, much the same. Restaurant and hotels, you look at grocery and alcoholic beverage. They have, let's see, we got one economist out here, I believe. Yes, an economist. Let's see. Dining out accounts for 6.3% of the U.S. CPI basket, but they estimate that a measure of spending habits during the pandemic would have lowered that weighting by almost half. So the point being is usually you have a basket of goods, right? You look at the prices, but those basket of goods of what we're spending our money actually on has changed. When you start tying in what we're actually spending our money on, of course that basket's going to be higher, folks, because we saw, prices are decreasing where we're not, right? Where there's less demand. Like for restaurants, you're not seeing any inflation, but for what we're actually purchasing, you are seeing inflation because the greater demand. Something to think about. The inflation debate's going to be out there for a while. It's driving a lot of the action. It's driving a lot of the interest. Discussions, of course, with the Federal Reserve, but something to think about because we're living in a changing landscape in a big way, folks. And with that, how about the NASDAQ 100? Talk about a little acceleration to lower prices. Tech stocks pulling back with a yield of about 1.65%. Stay tuned, folks. Basil Chapman's coming up next. Fast Market at 11 with Kevin Hicks and Alex Coffey. We got Larry at 12. Steve Rhodes, Dave White, Tom O'Brien live this afternoon. Thanks so much, folks. Have a great Wednesday.
Building